Today we're going to discuss and review petty cash, lesson 5-4, and in particular, establishing a petty cash fund, replenishing the petty cash fund. As you've already read, pages 134 through 136 look at the examples and the illustrations. And we're going to do the work together problem for 5-4 right now in class to review all the processes involved in both establishing and replenishing a petty cash fund. Now, an example of establishing a petty cash fund is on page 134 of your textbook. You saw and read and looked at examples of how petty cash, a fund can be established for petty cash, in this case for $100 in the example on page 134. Remember that cash itself, the asset account cash, is synonymous with a checking account. Petty cash is actual money that's kept in a safe deposit box or in a drawer somewhere locked up. It can be used for little minor day-to-day expenses that come up. On page 138, looking at the instructions for the work together problem 5-4, you're also going to be in the workbook on the appropriate page because we're going to do some journal entries. But I'm going to go a little bit above and beyond the actual problem because I want to do a good, thorough review of exactly what's involved here with both establishing and replenishing the petty cash fund. As they tell you in the instructions on page 138, it says journalize the following transactions completed during July of the current year using page 13 of the journal. And the first one is July 3rd, paid cash to establish a petty cash fund, $250 with check number 57. Okay, they're going to establish a petty cash fund. Okay? Here's how we're going to do that. We're going to write a check for $250 to cash. Or an alternative, a modern day alternative would be go to a Mac machine, use your check card, and pull out $250 in cash. That's going to come out of our cash account. We're going to credit cash for $250. Our debit, our general debit, is going to go to petty cash. The date, the check number are inserted as you see. Okay, so petty cash, this is a new account representing actual money that we keep in our business to pay small day-to-day expenses. Now, I don't have a ledger account for petty cash, but I do have a T account. And a T account for petty cash would look like this after posting. Again, I put this T account on the board in lieu of a general ledger account. $250 debit balance in petty cash, a new account that we have now on the books that we're going to be using. Now, the instructions for the problem jump right down to July 31st and paying cash to replenish the fund. I'm not comfortable going right to that because there's a lot of other things that happen before July 31st that I would like to take the time to simulate right now. On page 135 of your textbook, you're shown an example of a petty cash slip. Petty cash slips are filled out each time that money is taken out of petty cash, out of the drawer, out of the safe, to be paid to somebody who comes in and maybe performs a repair, or you send an employee to the post office for some stamps or supplies, things of that nature. Small items where you don't want to actually write the check, or maybe the accountant who writes the check is not in the office. Gone. Let's assume that in this problem, for the sake of argument, that we've only had 4 situations during the month of July in which we filled out petty cash slips. We've had a supplies purchase for $18 with the amount of petty cash in my example. And this is going again above and beyond I want to fill in the in-between what happened when we established the fund on the 1st and when we replenished it on the 31st. At some point in July, we bought supplies, we're saying, for $18. And then a second petty cash slip was filled out for $8. Miscellaneous expense is the account that we're attributing that $8 payment to. Then we had a $45 repair. Maybe copy machine needed repaired or something in the office needed repaired. We paid the $45 out of petty cash on whatever date in July and filled out a petty cash slip for it. Then we had another supplies purchase, a minor item, $7 item, also sometime in July. And it's felt that here at the end of July, this business would like to replenish the petty cash fund. Now, you've read about replenishing the petty cash fund, and you've seen examples of how it's replenished on page 136 of your textbook already. That's your model for how you've done it. Now, this is a different problem. We're doing the work together problem here, together in class. And based on these petty cash slips, we're going to have $45 to repairs. We're going to have $18 for supplies. We have another $7 for supplies. So technically now we have $25 worth of supplies, okay, that we're going to account for. And that's, I believe, what they spell out for you in the instructions of the problem. We have $8 for miscellaneous expense. So let's hone in on supplies, 25. Okay. Repairs, 45, and miscellaneous expense, 8. Okay. This is what we're going to be replenishing. We're going to put the money back in the petty cash fund, but we're going to write it off to these expenses and these items that we incurred during the month of July. So when they say on July 31st, that you paid cash to replenish the fund $78, that's the total. That's the total. And then the individual amounts, supplies 25, miscellaneous expense 8, and repairs 45, are what we've spelled out in what we are assuming we did with petty cash slips. So, to replenish the fund, and this is an important point right now, I am not going to do anything with petty cash. That's not going to be involved in my debit or credit here. I've already established the fund at $250, and if I put the money that I've spent back in, I'm going to be back where I belong, $250. What we're really doing here is writing another check to cash, cashing another check for $78, the total of the petty cash slips for the month. We're writing a check for $78, check number 97, and we're attributing the debit part because you can't have credit and not debits to go with it. Debits must always equal credits. And I have definitely spent $25 as evidenced by the petty cash slips. I've spent $25 in supplies, $8 for miscellaneous expense, and $45 for repair expense. That's the total $78 cash payment. So even though we're dealing with petty cash, when we replenish the fund, and this is the most difficult concept for students to get, when we replenish petty cash, we are crediting cash $78. We're taking that $78 from that cash check from things that we've already paid, and we're putting that money back into the petty cash fund. And in our drawer, in our safe, wherever we keep that money, we will have $250, which coincides with what I've got in my T account or in my general ledger account. Generally speaking, unless you decide to increase that amount or decrease that amount, you will never touch this account or have a journal entry for this account again. Every time you replenish the petty cash fund, it'll look like it looks here in the 5-4 work together problem. You'll have a series of items that you paid petty cash for as evidenced by petty cash slips, and you'll write a check. You'll write a check to cash to account for it. And then you'll put the money back in the fund, and it'll be right back where it was when you established it. Got it.